Welcome to What a Time to Be Alive. Today's video we'll look at the 9 best real estate stocks to buy in 2023. So before we start, make sure to like this video and subscribe to our channel for weekly updates. One of the most common ways people invest their money is in real estate. Most real estate assets have steadily gone up in value over a long period of time. But you don't need to buy a physical piece of property to enjoy the fruits of investing in them. Number 9. Realty Income Corporation ticker. Realty Income is a retail REIT that owns, develops, and manages U.S. retail real estate with a focus on single-tenant buildings. Realty shares pay a 5.2% dividend, the highest yield of any stock on this list. This giant among retail real estate investment trusts has paid shareholders without fail for 629 consecutive months and has raised that payout 117 times since going public in 1994. Over that time, its portfolio has grown to more than 11,700 properties, occupied by commercial clients under long-term net lease agreements that require the tenant to pay for maintenance, insurance, and the like, while the landlord just collects the rent. That rent comes from a diverse list of 1147 clients operating in all 50 states, Puerto Rico, Spain, and the United Kingdom, and anchored by such essential retailers as Walgreens Boots Alliance, 711, and Dollar General. Number 8. Equity Residential ticker. Equity Residential is a residential that owns and operates apartment buildings all over the United States. Analyst Kenneth Leon says Equity has an opportunity to raise lease rental rates in the near term. Also, Equity's coastal markets have done better than big cities like New York City and Los Angeles. Leon says a prohibitively expensive California housing market is helping elevate rental demand in the long run. The growing number of Gen Z workers will boost the demand for multifamily rentals. Equity Residential is having an exceptional year. The apartment reported an impressive 19.5% increase in its normalized funds from operations per share. During the third quarter, meanwhile, normalized per share was up 18.9% through the first 9 months. Compared to the prior year period, the company is benefiting from its strategy of owning luxury apartments. Number 7. Welltower Incorporated ticker WELL. Tower is a healthcare that invests in senior housing, specialty care facilities, and medical office buildings, among other things. Occupancy rates and pricing power should improve over the next 12 months as COVID-19 risks continue to subside during the pandemic. No new buildings were built, which could lead to a good supply-demand imbalance in the future. An aging population will be a secular demand driver for senior housing and healthcare facilities. Although Welltower and many of its peers have faced headwinds during the pandemic, including falling occupancy, the balance sheet retains its investment grade rating. Number 6. Retail Opportunity Investments Corporation ticker. Retail Opportunity is a real estate investment trust that focuses on purchasing and revitalizing retail shopping centers in mid to high-income markets throughout the Western United States before joining CEO Stuart Tunn's group and Pacific Retail from a $146 million IPO to its $4.1 billion acquisition by Kimco Realty in 2006. Almost all of properties are anchored by national or regional grocery store chains. This helps keep customers coming back to the stores of other tenants, with 84 shopping centers in its portfolio. Number 5. American Tower ticker AMT. American Tower is one of the world's largest REITs. With a 2.9 dividend yield, as its name suggests, the company has a portfolio of about 223,000 communication sites that can be used by different companies. But contrary to its name, only 43,000 of those sites are in the US and Canada, while the remaining 180,000 are in other international locations. American Tower is a huge business that is part of a global oligopoly. This makes it one of the safest bets in the real estate market. Number 4. Public Storage ticker PSA. Public Storage is the world's largest owner, operator, and developer of self-storage facilities. With an annual dividend yield of 2.9%, the company operates over 2,900 locations and serves nearly 2 million customers. Public Storage has done a good job for its customers and increased its operating margins in recent years by using digital innovations to allow more than 1 million self-service contact-free. The number of Americans who rent storage units has increased by 5 percentage points from 2020 to a record 38% in 2021. More people are using them to help free up space in their homes, but challenging circumstances like divorce, moving, death, or downsizing are also reasons people may turn to a storage facility. Number 3. Equinix Incorporated ticker. Equinix is a specialized REIT and is the world's largest data center operator. Equinix has opportunities to expand its current sites, and competition is limited due to the high barrier to entry in the data center business. The company also has a large base of recurring revenue, which makes it easy for investors to see how much money the company is making. Equinix is the partner of choice for many well-known tech companies because of its cloud-based global platform. Equinix Metal Service has also seen strong growth in bookings in the last few quarters. Number 2. Tanger Factory Outlet Centers ticker. Similar to Retail Opportunity Investments, Tanger Factory Outlet Centers is a REIT that invests in shopping centers. Its 37 upscale shopping centers located in the US and Canada collectively house more than 2,700 outlet store locations operated by 600 brand name companies. Recently, Tanger increased its dividend for the second time in 2022, bringing its annual yield to 4.65%. Number 1. Innovative Industrial Properties ticker. Founded 6 years ago in late 2016, Innovative Industrial Properties is a REIT that focuses on acquiring, owning, and managing specialized properties leads to state-licensed operators of cannabis facilities. Its dividend has grown quickly and now yields 6.54%. Its current portfolio consists of 111 properties spanning 8.7 million rentable square feet across all 19 states. Cannabis is legal even though it has a small number of tenants. No one tenant makes up more than 14% of its portfolio today. So, when investing in real estate stocks, you should be careful and look at the strength of a company's tenants partners and the industry in which it works, but as long as you're willing to buy. Thanks for watching and best of luck with your investments.